obviously with the presidential election in terms of the certainty behind President-elect Trump, the Fed's successive cuts of 75 basis points, that's going to be conducive to more deal making and transaction activity. We've been an active participant in that. I think as you may know, since the onset of the pandemic, we've sold $900 million of assets. So we're going to continue to be an active seller in this market and hopefully monetize those assets, and then we'll use the proceeds to buy back shares and pay down debt.
I'm here today with Tom Fisher, co-president and CIO of Pebblebrook Hotel Trust. How would you describe the capital markets landscape for Pebblebrook today, and how is it impacting your plans for the year ahead?
Well, let's start with the transaction market. I think the current theme, certainly for this year and probably the last 18 months, has really been about investor conviction or lack thereof. I think what we've said all year is there's been a lot of investor interest, but a lack of investor conviction. I think, as you know, obviously with the presidential election in terms of the certainty behind President-elect Trump, the Fed's successive cuts of 75 basis points, that's going to be conducive to more deal making and transaction activity. We've been an active participant in that. I think, as you may know, since the onset of the pandemic, we've sold $900 million of assets. So we're going to continue to be an active seller in this market and hopefully monetize those assets, and then we'll use the proceeds to buy back shares and pay down debt, which is obviously the best allocation of capital now, given the fact that we're trading at such a significant discount to our NAV. On the debt side, I think the debt markets have been improving all year, not only in terms of availability, but also pricing. And so I think that's also going to be conducive to a more active transaction market.
And where do you see the strongest opportunities and potential challenges for Pebblebrook in 2025?
So I think in terms of opportunities, it's really about what we talked about on our earnings call. It's about the urban recovery. When we kind of look at our urban portfolio, really people forget the peak year of our urban portfolio in terms of occupancy was 2016. I think we ran 86%. In 2019, we ran 83%. Last trailing 12 months, we're about 71%. So there's a big gap. We're not going to get that back overnight. It's going to be incremental. But we still like the urban recovery because leisure's going there, international travel, et cetera. We think that that's coming back, and incrementally make some changes and make some gradual improvement. I think also what we talked about on the earnings calls, we've had 3 markets this year which have, underperformed: San Francisco, Los Angeles, and Portland. And we think that the base for 2025 looks much more promising for those markets. LA, for example, we still have the lingering impacts in 2024 from the actors and writers strike. San Francisco next year in 2025, the convention calendar is up 50%. And I think just overall that the politics in each of those cities is getting better and more conducive for a more pro-business, or at least a moderate agenda. I think also we've invested well over $500 million in our portfolio to reposition, reimagine, and remerchandise. About 280 million of those have been in ROI type redevelopment investments. So we're continuing to see market share gains as well as RevPAR gains, and we're going to continue to see that year over year. And we talked a little bit about that on the call in terms of the share gains with a number of those properties. We feel very good about the recovery of BT travel, return to office. Our group pace next year looks very good. And then something that's been kind of unique in this cycle is really kind of the decoupling of hotel demand and GDP growth. We've had a relatively flat hotel demand environment over the course of the last 12 to 18 months. And we think that's probably going to reconnect, especially when you're in a GDP environment and as things continue to normalize. We think we're at that level of normalization where GDP and hotel demand will more closely correlate, and there'll be that reconnection.
And as you meet with investors here at REITworld, are there common questions or issues that you're responding to?
I think it's, we've had a number of meetings so far, and it really starts with the macro. Everybody's questioning, the BT recovery, the group, how sustainable is it? What's the resilience of the U.S. consumer and the consumer in general? What's the pace of international travel given the strong dollar? Also, the election implications. not only from a national level in terms of President-elect Trump and his agenda, but also on the local level.